fam. It's Dark Angel's Journey. I'm Shakira. So, it is a very volatile, very, very volatile week. Bank collapsing, multiple different CPIs, PCI, all kinds of eyes coming out this week. I mean, wow. So, let's take a look, right? And I'm going to be going through a bunch of ICT tweets. I figured since I'm going to be doing it anyway, I might as well make a video while I'm doing it. I am for, realizing that I need to better formalize my review process, right? I'm going through all this stuff, but I need to also take time to actually like you do in college when you're studying, right? Like you gather the information, you hear it, but then you have to find a way to like internalize it and make it a part of you. So, morning vids, evening study. I've got myself a little binder that I'm printing out all my notes and everything so I can just have it in my hand and just be like, and writing and stuff. Because otherwise, I'm not gonna, remember. Because right now, I'm basically focused on a few line items and that's it. And there's so much more to pay attention to. All right, so let's like see what's going on this morning. It's probably gonna be at minimum an hour or so long video. So be warned because I want to like at least be up and about while what is it? Today's Tuesday, right? So 8:30, we're gonna have I don't care about that. CPI month over month, year over year, and core CPI. I mean, come on. And then tomorrow again at 8:30, core PPI, sales. What I don't even know what any of most of the stuff is. All I know is that we gonna get hit in the face some more, just beaten down, just oh my God. And then Friday there's some prelim UOM, whatever the heck that is. So something that I was looking for and I mentioned in another video, um, what was it? Barcharts.com, the um, sentiment analysis. You know, seasonal tendency. Sorry, saying it right. Seasonal tendencies, bar chart. Something that I'm going to also be printing out and recognizing and paying attention to on a regular. Hold on there. It's not the one I found yesterday. You know, this is no, sorry about that. Hold on. I'm being silly, y'all. I'm being silly. I have a bookmark for this, and there you are. Yeah. What? No, I didn't just bookmark that. No, I don't want this one. That's not the right one I want. Go away. Bookmark. Oh, I'm being so silly, guys. I bookmarked it on a different browser. Hang on a second. Hang on. Sorry about that. Oh, sorry about that. Where's my futures? My futures. What am I blind? I'm blind, y'all. I'm so blind. Okay, here we are. Hold on. Because I looked for two things. I guess you have to pay for it if you want to get like um the the more specific future stuff, but a second, let me just do a quick search here for seasonal tendencies. Pools, blah blah blah. I'm sorry, this is what I would be doing if I wasn't even making this video, so don't even. Oh, I absolutely, totally favorited something yesterday, and why can't I find it? I created a futures. Did it not save? Looks like it didn't save, maybe. That's not cute. It's not cute at all. But anyway, I should be able to find it the same way I found it yesterday, right? Seasonal tendencies. Our chart.com, and I was looking for futures. Seasonal charts. Is that the right one? Seasonal charts. Not quite. Hmm, that's close, but why is this difficult? Found it easily enough yesterday, but now as soon as I'm like doing something, it's like difficult to find. You know what? I didn't even put that. I know that's where I found it, but I just did seasonal tendencies futures. And then is this the one? I still keep clicking on the same ones. Uh, okay. So you guys are watching me fumble around, and I still don't understand what happened to my bookmarks. That's the only ones on here. Did I bookmark it someplace else like an idiot and forget about it? And why is it so hard for me to find what I'm looking for? Like, come on now. Oh, no. It's definitely on bar charts, but that's not the link. This is so weird. Okay, I'm sorry, but you guys are going to be like watching me deal with the history. Let me look at my history on my other tab here, because obviously I am losing it. Hmm. Ah, here we are. Ah, sigh. Sorry, guys. You guys had to watch me fumble like a cray cray person. There we are. That's what I was looking for. Jeez. This thing just went missing. So I didn't turn the lights on because this is the sun's coming up, whatever. So you have to deal with a dark Shakira. Well, now that I found it, I'm gonna get tiny. All right, tiny, 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 tiny. All right. So seasonal tendency for the S&P 500. So we are at somewhere about. So this is 20, 15, 10, 5, 2 years. So basically, I'm gonna drop the most recent stuff, the last let's leave the last 5 years or so. So the general idea is, we are at the beginning of March. So it looks like between now and running into the end of March, the tendency is to drop, at least for the last 5 years. In recent years, it's still the general tendency. I think this red line is noting where we are right now. Um, yeah, current day. So the tendency at this point in time, once we hit March, was for it to drop. And I mean, let's be honest, right? Let's jump into the charts really quickly here, and let's take a look at. Yeah, okay, perfect. And let's take a look at where we are with the June contract for the E-mini and what happened as soon as we got into March. I mean, come on. So this kind of flows into the higher time frame analysis and just understanding where we are. Now, once we get into April, we're expecting price to start to roll back up. About April, May, looks like there's a bit of a, for the last like 20 years, there's consolidation there. 15, still a little bit of a rise. 10 years, more of a rise. I'm gonna drop the five. Yeah. Okay, yeah. And then the last 2 years, wow, that's been a lot more volatile than the last 20 years. But it still tells the similar story, right? Drop, rise in April, May, June. Looks like there's a bit of a consolidation type thing over here. But right now, let's focus on where we are, which is the tendency is to drop. So let's take a quick look at, let's just dive into the monthly, and then I'm going to dive into the ICT stuff. So for the month of March, we've been forming a beautiful, beautiful red candle. So bearish there. And then the weekly candle is that is a ridiculous weekly candle. I mean, what's silly is that we've just come into PD array right here, another one here. So what is that? A bullish order block, right? Bigger body, so I'm gonna use that one. And did they tap that like perfectly? Let's see. The close of this candle, looking up here, the close of this candle is 38.94.75. The close of this candle is, let me stop moving, 39.16.50. So it dipped, just didn't quite make it down there, but close. Very close. Let's look at the daily. Now, once I switched over to the new contract, all of my drawings went to hell. So I'm gonna have to redo everything, which is fine. It's a good practice. So they haven't taken out these lows yet. So let me switch to my actual, add those and add those. Okay, so this is what I'm trading on. Let's dip up to the 15-minute. And so 8:30, we have some fun coming. In the meantime, we had these very, very juicy equal areas, and they've taken it with some alacrity. So let's dip into the tweets from this morning from the ICT, and let's see what he's been saying, and then we'll drop what he wants to study today. Okay. So first tweet, every market right now is showing you what price action looks like when you're 99% likely to lose if you try. I mean, look at yesterday's behavior. Look at this. I mean, come on. Drop, wicking. I mean, this is on the 15 minutes, so it looks a lot nicer, but the sentiment was so strange. Like, I couldn't really find, I couldn't pay attention as close as I wanted yesterday during the day, but couldn't really find like an entry that I wanted, you know? Anyway, so then he dropped, and I'm going to copy this image over here so we can have it for your viewing pleasure. So he dropped this tweet and said, study, right? And this is on the 2-minute. So let's drop that and make this the 2-minute. And as always, I have the NASDAQ. Oops, I don't want that. Oh, sorry about that. Put that back. Okay. And I'll drop the NASDAQ for the moment. And let's drop that. Okay. So he wanted us to study this. So let's dip into this. So again, he's also noting the very, very, very flat. So he's like, look at the behavior around where price is, it's just way too clean, right? Okay. So when he said that, he was like, watch that. And then it was about somewhere around here. So look, look at the nice setup that they created for you to trade that, right? So we dropped, we rose up. Did it leave us anything juicy? This right there. Look at that. Look at that. Traded through it, came back, bodies respecting it, go long, aim for them to take out that puppy. If I was, let's say I use this guy and for targeting, and I put this on top of that. Wow, look at that. Spot on right there on that one. I would have aimed for that or that. One deviation is not bad. It's a relatively easy expectation to make, right? So let's say you were going like consequent encroachment on that, stop loss below that. Pretty simple. Aiming for this guy. I know it's all eye inside. Don't judge me. I'm just watching price. 7 to 3 ticks with a 5 tick stop loss, and technically you probably would have put it on underneath here. 11 ticks, not bad. Not bad at all. And it's probably gonna keep. We'll see how it behaves. Let's drop back down. Okay, let's see what else he's got going on. So this is played out nicely. Ew, look at the 1 hour candle on that. I mean, come on. Come on. Come on. Ridiculous. Anyway, so next. Now, as clean as 3912 is in ES, despite seeing a potential PD array that could lend well to an entry to a run above 3912, the environment is not conducive for a high probability price run. As I mentioned 2 tweets before this one, right? So let's look at what PD array he's talking about, right? So I guess you could consider that bullish order block. This one right here. Yeah. Bullish order block right here. That's probably what he's talking about. That's a lot of wick. We've seen them come down here at least twice. So once, second, another opportunity on the 15-minute. But this, they left that PD array, then this fair value gap as another opportunity for proper entry right there. And then, and I'm just going to draw this out, right? Because I just want to see how close, right? So PD array right there. So that's bullish. So bullish order block there. Then I'm looking at this wick, just the wick. So I'm just thinking about consequent encroachment of the wick. Look at that. Okay, so we have consequent encroachment of the wick. We have a bullish order block that they've traded down to, right? And they've also not gone too far away from. Again, additionally, we have this, right? Did they even make it down to it? Almost to the tick right there, CE of this wick, right? So once we see them not rolling back in, then respecting this guy, an entry could have been made from here. We didn't have to wait for this guy to over here. It's fascinating. So fascinating. So easy to see in hindsight, but when you're in the middle of it, man, that's rough. Okay, so I see what he's talking about. We had consequent encroachment. So you beautiful, beautiful, beautiful. All right, so then he said, note the ESM 2023 1 minute 613 down close candle. So let's dip into the 1 minute. And he said 617. Sorry about that. 617, this guy. Ah, bullish order block. Okay, right. So another bullish order block. They did come back into it. Inside the volume imbalance I showed you initially right now, that was at 648. Fair value gap right here. I think this would be considered an institutional order flow entry drill. They've barely tapped a little bit into it. You could have taken it here as well. Multiple opportunities Now, he mentioned a volume imbalance. So 647 fair value gap, BISI, buy side inefficiency, sell side imbalance. So that's the 647 right here, the BISI. That's where he's not. So I also noted that. Beautiful. Yeah. Note where the bodies of my 1 minute candles are forming inside my 1 minute volume imbalance. Where is this 1 minute volume imbalance that he's talking about? Oh, is this that guy right there? Hold on. That's definitely a volume imbalance right there. Right there. Interesting. So he's not wrong. They are forming inside of the volume imbalance right here. Yeah. Okay. Note how my volume imbalance offers price support before running higher. Yep, sure did. Beautiful. Do you see how reluctant price is? Move a little retrace, move a little retrace. What kind of condition is this? It's a high resistance liquidity run. Nevertheless, screenshot your 1 minute. Yes, here, label it OB. Okay, I'm gonna label it as he said. Beautiful. Let's do this. So he's like OB 617. That's 617. Order block 617. Okay, so he's using this guy right here. So let's annotate all of that. Plus OB 617 order block right there. Price run to buy side 39.10, which is above here. And then price 39.12, which is above here. Buy side remains in crosshairs. Love that. 5 handles. Now, CPI is not a factor for FOMO or a gamble to lose in. Okay, I love that. Okay, beautiful, beautiful. Let's label that. Just prop that here. And I'm just going to adjust all of these. I'm gonna just, so this is a BISI / FEG right there. And let's adjust the color to something else. Oh yeah, let's make it sort of greenish, huh? The BISI, for the best. And we had the volume imbalance, and then let's just keep that as a fair value gap. Go right there. And then we had another one down here. And I'm just going to note the buy side here and here. That makes perfect sense to me. And we can take that off. And look at that beautiful run above it. So the entry is supposed to be here. And this falls into the 2020 model right here, right? Because of the fair value gap right inside of here. We're coming into another area. They gave you a secondary opportunity here. So entry at this order block, and we're going up. Nice and pretty right there. And that's, if we were to do like a 5 handle run, you drop it below that guy. Not likely to come back down. Get that entry in here, hang out, and we're aiming for above this. So before I had dropped, let's also drop it here with this high right here. So if we're going above here, then that guy would have been good. If we're going above here, then that guy would have been good. And it seems to be continuing to rate up. I personally would have just gone for this red here, 53 handles, been done. 5 handles would have been like quick and dirty right there. Boom. In and out, 250. Nice. Secondary opportunity, IO Fed. I'm just going to note that as well. So institutional order flow, an entry drill, an area where they dive into the fair value gap very, very shallowly, but they don't really do much, and then they just kind of run away. So once you saw 1, 2, then you could have just, if it hit it a second time, then that would have been a good opportunity for an entry. So I'm just gonna note that. Let's change the color. It's like orange. Let's make it a little bigger. Boom, right there. IO Fed. I like that. Beautiful. And I'm just gonna screenshot this for my notes. All right, let's go. Smiling, smiling, the randomness. Did your ES chart print above 3912 too? Yeah, it did. Cherry picking Pimp Daddy. Yes, that's me. I'm reading ICT quotes here. All right, go back through my tweets and you'll see me outline this in real time, tweet by tweet, minute by minute. Okay, so in case you missed it, and I have mentioned this many times in the past, if there's a high impact news event in the AM session that I will not be willing to participate in or trade, look for early events before the AM session starts. Avoid the slaughterhouse. I will live stream Wednesday morning. CPI is going to create a circus ride for price. I'm done for today. Conducting another real money, real people interview this afternoon. Be safe. All right, cool. So that's it for ICT stuff. And this is pretty beautiful. Let's like really pay attention to our opportunities here, right? And see. What I like to do right now though is take a look at how Asia traded, right? So we're on Tuesday, and where's the high of the day? I guess we just broke it, right? So the original high of the day was actually about here, right? So this is midnight. So that's the opening price. And we did a little bit of a swing. So I'm going to do two things. I'm going to drop at midnight. Okay, I'm going to drop the opening price, midnight opening price there. And then 8 p.m. GMT, 8 p.m. the night before. So something that I'm slowly learning. Okay, so you opened up here. So let's call that 0 GMT. So 8 p.m. Eastern Standard. Okay. All right. So, wow, what a ride. So after 8 p.m., Asia decided to rise, consolidated over this fair value gap, okay, on the higher 15-minute time frame, and then consolidated, and it broke out. Give us an opportunity right there. It's kind of hard to tell, right? Maybe if I had the seconds, I could actually like do something about that, but can't. And then midnight comes, and what do we do? And this would be for like trading the London session, right? So midnight hits, we have like a slight Judas swing up. And then what did that leave us? Wow, that is slight, isn't it? Basically a volume imbalance at this point right here. And that would give you a nice little entry potential, right? Because we've seen they've risen in Asian, consolidated for a bit, then after midnight, traipsed up, then dropped, broke that, so a proper shift, and then rolled back up into it for a potential entry. And honestly, like once you saw these two, look at the way the bodies are respecting that thing. you know. So what do we have here? We have an order block right there. So you could have entered on this bearish order block right here. Negative order block right there. It traded up. Stop loss would be up here above this guy. Watching the bodies, they're respecting it. That guy. And then what would be the target, right? So what do we have for Asia, right? We have this as sell side. We have this as sell side. And that guy as sell side. So wow, they did it all, didn't they? Okay. So let's do a little targeting. So grab the top of this guy, the bottom of that. And so if we've been aiming for this, then that's pretty close. So that one would be the better choice. Nice, not bad at all. And that would have been what? From a tick perspective, short. So if we'd entered here, stop loss above there, and then we're aiming for this. That's what? 35 ticks there, right? And that's right after midnight. You'd have gotten that by 1:30. Then you could have gotten out. Still leave this up. We have another opportunity for an entry. They roll back up. They give us something juicy for this one, though. Let's see. So they broke that. So we know they're continuing down. We've got bearish order blocks here and here. So, I mean, if we're being honest, then this right here, we have a bearish order block. But let's look a little closer, right? We have a very, 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 very small fair value gap right here. So given that that's there and that's there, I probably would have been like, you know, consequent encroachment of that for the order block. So somewhere in there, we have 1, 2 very long ones. We could have also just taken this guy too, because they traded right up into it. So we had a couple options. I would have been a little bit nervous. I would have done that midpoint for that order block. And then let me move this. We already had a range set up from earlier. So let's clear that out. That potential. And I'm going to utilize this and that low right there. Okay, so that high and that low. Okay. So I'm gonna be aiming under here. So we've got this plus, gotta remember, we got this fair value gap down here too. So heck yeah, beautiful. And then we gotta look to the left, right? We have this as an area of interest. So aiming for this guy would have been a nice, quick, low resistance run, right? So with an entry here, which probably would have got us, we would have got in here, because I would have been looking at the bodies of that, thinking, yeah, we're good. Stop loss above this, the order blocks, and then targeting these lows down here. So that guy right there. So that's 2 trades and all 30 ticks right there. Not bad. If you're really adventurous, you could have just been like, you know, forget this. We're going to go for here. And that means we would have stopped right there. Yeah, let's be adventurous. Because once it started dropping like that, nice. You know, stop loss would have had to be moved into profit. my motto at this point is to, once it hits 50% of the way, 75% of the way, which is where it was right here, then I would move it to break a little bit above break even. So in this case, let's say I was holding for that low right there. Then my stop loss, we have fair value gap up here, none here, none here. Yeah, so I would have just dropped it like probably right below there just to, you know, as an example. So if they're coming into this, then they're probably going back up. So that not bad. And then by 2 o'clock, London makes let's delete all this stuff right here. We don't need all of it. So then by 2 o'clock, London, makes a low, gives us a rejection block, and then we're trading back up. This fair value gap right here, we traded back up into it. And let's just visualize that. We've got further things to study from ICT. Beautiful. So they dropped into this fair value gap. So then once you started seeing the bodies, look at the way it's respecting it. Wicks do the damage. Zoom in. Wicks do the damage. Lots of things to focus on, right? Things that I find very volume imbalance right here. Let me change this color. Let's do FEG. So volume imbalance right here. So once we see them actually shift above here, we make a nice break. No fair value gap down here, nothing, but they did make a volume imbalance. So this is where you could have had your entry to ride it back up above this guy right here. Fascinating to check price. And what would have been for targeting purposes, it's not quite accurate. Let's zoom, bring it down. Perfect. So buy sides here. So then I would have been targeting here or here. This guy is super close. So that one's fine. This one, wow. Did they tap that to the tick? Hold on. That's the high of that. 3907.75. Guys, 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 ladies, people, folks, come on. There's just way too much proof that this thing is algorithmic. I mean, are we serious? Are we serious? 1.5 standard deviations. It taps it to a tick. I mean, what? All right, so let's say we were all brave enough to take that long from this volume imbalance. Stop loss below this big boy because yeah, it could dip into there. And then we're aiming for this guy. That's 39 ticks right there. If we'd aim for this guy to the tick, 51 ticks. Been a very relatively productive morning for trades, right? If you see what you're looking for, because in this case we saw them drop down. They've taken buy side here. So I don't necessarily know that they need to. They showed us that they wanted to stay within this fair value gap. Boom. All the bodies are respecting the heck out of it. Also, I just noticed they're literally hanging out at the opening price at 8 p.m. When I start trading, I'm probably gonna have to trade the Asian London sessions. Wow, look at that. So clean. And then we had a nice shift right here. Volume imbalance, nothing else juicy below it. Beautiful place for an entry. Buy side available right here, right? And then just target. And then you're out. Now the kill zone is from 2 to 5. They give you another opportunity for some stuff. Let's see, they came and took out this guy, so we can clear it out. But that's beautiful. Did they come back down? They're still respecting this fair value gap down here. Look at the way they're respecting this one. Nope, nope, nope. Then honestly, like the simplicity of this cannot be understated. Smaller fair value gap here, respecting it, but they're respecting the bigger one too. It's the higher candle for the order blocks. Take the wick instead, long. Where would I'll use this one right here. Control Z, sorry, didn't click it. Targeting, let's use this base right here and this one right here. And if we're aiming for above this, because I've been consolidating, so I don't know how much higher it's gonna go, then my next option was up here at the midnight opening price, which they came up to beautifully and then dropped. I mean, come on. It's crazy. And we have this big bearish order block right here. So could have entered right there. Once we saw him come back down, shift, probably would have entered here, seen a bit of a rally. I don't know. Well, you know, if it was me watching price, we have this nice shift, fair value gap right here. I probably would have been looking at this one. Let me drop that there. And then looking to the left, buy side here. So let's see. Would we have gotten that? That's a no on that one. But if I'd specified the buy side above here that I'm using to aim, then yeah, would have gotten that nicely. And that would have been 40 ticks. Not bad. We would have had to deal with all of this, but the stop loss would be below the order block. This one, actually. How many ticks is that? 15? Yeah, so 15 ticks for faulty. Gotta live wild and dangerously out here. All right, so what are we doing right now? It's 8:06, so it's gonna be fun. Now, we all know they love to manipulate price before CPI ever even comes out, right? They absolutely adore it. All right, so we have more things to study. Look at that. He noted a divergence. Let's take a look. I didn't even look. Let's see. What's he talking about? Let's take a quick gander here. Let's go do this. Oh wow, look at that. Don't worry, I'll note it. So look at the divergence. Shut up. Look at it. There you go. What? What? We can take this note off. So let me just note this is SMT, divergence. You know, because sometimes I am, let's just make this like orange or whatever. Just do the same here. Sometimes when I see these divergences, I personally feel like it's, you know, like this. What? Let me move this to the middle center. Oh, just notice I didn't do the center for that one either. Wow, look at that. So this was obviously a liquidity run. Man, this diver, I'm used to seeing it in the opposite direction where this is pointing up and it won't make a lower low, and then it takes the liquidity and then moves away. Still slightly somewhat confused about most of this, you know? Let's go see what was it YHM? Or is it YM? YM. Let's find the YMM. Okay, let's see. What was that? What was it doing at the same time? So this happened, this was on the 520. Okay, so 520. So at least one of them has to diverge. These two, 522, were moving in lockstep. And this one was like, we're going down. I'm yelling timber. Hmm. Like I said, I'm used to it being the opposite flip. This has taken the lows, this won't take the lows, and then that tells me it's going up. Like, this is quite a deep one, too, honestly. It's a strange. Oh, did they trade up into a new week opening gap for Sunday for this week? They did. It's annoying. I don't know that because um when you switch contracts, it removes all your drawings. So annoying. Wow, that's crazy. It's very crazy. All right, let's dip out of this guy and all this is already sorted. Not to think about this divergence business. I'm gonna come into the 15 minutes to try and specify the gaps for the week. The 12th, Friday. Okay, so let's drop this to 5 minutes. I'm just deleting the I need to create a new. Let me not do it on this one. Let me I think I have my actuals open for that. Yeah. So let's get some new week opening gaps sorted out while we're waiting um while we're waiting for 8:30 to blow in. So we did open here, even if we dropped. So it's nice white blue. And then we closed here on Friday. And line. Maybe I'll pick a different color. Blue's nice and everything, but yeah, let me just adjust. Let's just dash that and new week opening gap, 312. Okay, so let's see. When these exist, you can tell, you can start to realize where you are and how they're behaving and what you can do with them. It's crazy. And look at how they trade around these areas. Now, there's one above it, so we're gonna have to go and search. So let's go back 5 weeks, right? go back 5 weeks. Let me grab my calendar. All right, so the 5th. Let's go back to the 5th. Let's do this. Back up. Where are you at the 5th? We were higher up. Okay, and sometimes the ones they're trading back to aren't the ones that are like in the last 5 weeks, but let's just note those. Okay, did we actually gap? Looks like we did. All right, so that, and we closed there. Let's dive in so we can be as accurate as possible. There, and right there. And then let's approximate the center with our eyeballs. Let's dot that line, and this one is, and let me put my glasses on. And we opening gap for 3, 5. All right. Next in the line is the 26th of February. Coming down, coming down. Oof. All right. 6:10, 6 o'clock. So we opened here and we closed. Oops. There. Approximately. Okay. That's why you gotta zoom in. You guys ever watch Zim Enter the Floorpuss? There's that moment where he's like, zooming in, zooming in. I love it. So funny. There we go. And let's get our approximate center sorted out. And this is new week opening gap 226. Okay, so next on the hit parade is the 19th. Right, 24th. All right, so somewhere up here is the 19th. That gets choppy. Well, this is the June contract. It probably wasn't being traded as richly as the March contract. Okay, here we go. But it has more liquidity now. So we opened the top of this guy and close bottom of that guy. Let's zoom in for accuracy. That's pretty good. And let's get our center, eyeballing it. Getting it, eyeballing it. All right, how many have we gotten so far? So with the 12th, the 5th, the 26th, the 19th, and was this the 19th? Okay, so we need the 12th. So one more. Just got 5. Kitty is eating. Yum yums. Okay, here we go. So last but not least, that's the open. And let's do that. And this was the close. And let's zoom in. Okay. And let's get the center. What time is it? 8:18? All right, cool. And let's dot that. Approximation. That looks better. And that's 5 weeks of new week opening gaps. And this is 212. Okay. So let's head back over and let's see what's happening with price. All right, so based off of this, 1, 2, 3, 4, 5. Now I'm pretty damn sure there's one in between here at the 3980 levels, but that goes way back. Maybe we'll be able to find it. In the meantime, we have these, they want to go up. We've got buy side above here at 39.32 and above 39.40.50. So I'm going to save that. And then, of course, we have 39.71 up here. Okay. 19. Let me plug this puppy in. Let's see, what am I doing? Ah. All right. This is fun. I'm excited. I won't be pushing any buttons because I'm not crazy. And I'm also not trading with anybody. But look at the way they're behaving around the new week opening gap. So 39.20.50, 39.13.50, and all this wicking up here. So I'm not going to mark this up more. I'm just going to save that and head back over to this guy. So at least I know where we are in relation to things, and then you can see how they behave at different time frames. And where's the 8:30? Oh, we're about to have 8:30. Haha. It's going to be higher. Okay, so what do we have? It's Tuesday. It's Tuesday, right? Yeah, it's Tuesday. Okay. Lots of CPI. We don't even care what the numbers are. We just need to watch it and see what it does. Fascinating. I and let's also check which one am I in? Let's do that. Okay. Nasdaq's all the way up here. What are we looking like? Huh. Same thing on the divergence there. Look at that. Wait. Yeah. So we went down there and same candle going up there. Have we flipped? We've literally flipped. So this is refusing to make a lower low. And then what's this guy doing? What was the time candle on that? 7:35. Okay, so let's go look at it. 7:35. Yeah, so these two are going up. And this one says we're diverging downward. I wonder if that's basically saying that regardless of all of this, we're still dropping. I don't know. And this is why I need to practice more. Let me check my homework. Yeah, I'm printing this. I need examples to reference. So, that's what I'm going to be doing with it. What I don't know. Okay, so we got 8 minutes before CPI comes out. Let's see how they mess with things. While that's happening, let me log into my daytime jobs while we're making this video by. I'm gonna have this up and actually just for funsies on the 15-minute, let me just specify the buy side that's up here. And let me note this nice fair value gap as an area of interest on the 15-minute. Just 15 minutes. Okay, and right here we also have a bearish order block. Right here. Does it say 5 minutes? Sorry about that. It should be 15 minutes. Let's adjust that a bit. It's going to be a smaller target right there. So that's that. And then the 15-minute order block's actually up here. There's also a much bigger, and actually, let's do this on the 1 hour actually. Let's delete that. Whoops. Got 6 minutes to delete that. Let's do this on the 1 hour. Stronger PD arrays. Sideways. Zooming in. All right, so they're at a bearish order block right now. I mean, when you zoom out, you realize they really haven't gone anywhere, right? They took out the buy side onto here shallowly. So the 15-minute is what I'm going to have to use for this targeting. Yes. More definition. So they have this fair value gap. I'm going to assume consequent encroachment of this wick, see how they, oops, grabbed the wrong thing. CE of this, giant wick here. We also have, let's note that, this is consequent encroachment. And then we also have this rejection block right here. Now, without news, this would actually be great, but do I have the thing for rejection block? I do not. Okay. So let's do this. Rejection block and top, and let's change the color. It's a rejection block on a deep shade of red, thick. And let's save this as a template. Rejection block. It's a rejection block because look at how price behaved. It dropped precipitously. Doesn't matter if there's like a freaking wick. The wicks do the damage. And we'd be at the very base of this fair value gap right here. So let's see how this plays out on the see how this plays out. What do we have? 3 minutes? Okay. All right. And I probably should have gone live with this, but I don't know. It just wasn't. And then we have, so let's dip back out. So we have things to aim for technically. Just make that visible on the 1 hour. And then let's bring this over. Thank you very much. And there, let's zoom in on where we are. Oh, and let's be clear, right? If I'm wrong, for all this juicy sell side under here and under here that they can go crazy with right now. So let's clean that out. Here's one that hasn't been filled in. All right, we got 3 minutes. Note 3978 as buy side. Oh, I opened it up with a plan to, he said 39, so this guy right here. Nope. That one, yeah. That's when they're so close, I always pick the higher one. So that's the last thing I forgot. So he's saying it could roll all the way up here. He has an ICT. Cool. So then, it should cut through all of this like butter. Should cut through the rejection block like butter. And we'll see. See what they do. Okay. Oh, and okay, so 8. 28. So let's focus up here and zoom in on this price action. And let's see how they roll. We got a divergence. Let's note that. SMT divergence here. I can't Nasdaq's below here. Gonna be able to read this. I'm surprised they haven't done any damage yet. Usually they do something. I do not know which CPI will be used to engage, but those are where I'm monitoring. Okay. All right. Let's get ready to rumble. Uh, so while we were waiting, it's 8:29. I am getting Whoa! There we go. Oh. All right, I'm gonna go to the new week opening gaps. Do I have anything below there that they're aiming towards? So 8:30, we don't even know what's happening. They took out all of this in one fell swoop. There's this guy down here, bigger target is down here for sell side. And you've got a juicy fair value gap for them to fill. Beautiful. So the manipulation. Shake everybody out first. Uh, let's do this on the 1 minute so we can watch this loveliness unfold. And I'll be switching back and forth between my and it doesn't matter what the actual news is as long as we can see the reactions from it and the reasons why we shouldn't trade it. Okay. All right. Wow, look at how they shook them all out. Like they took that with alacrity, with alacrity. Make it all the way down here. Now they focused in on all of this. Since this is super close, they focused in and took all of that out first. And now what? See, the news, we hadn't even gotten the stuff. Like if we go to Forex Factory and refresh, is it even there? Okay, it is. It's the same, it's the same. And that's gone up a little bit. So we didn't really go anywhere. But look at the manipulation. Look at it. I mean, come on. All of them behaving the exact same way. Mm-mm-mm. It is mean. This is why you don't trade when news comes out, because this is how they get you. But remember, I noted rejection block, consequent encroachment. Oh, wow. Did they fill this fair value gap to the tick? They did. Look at that. Look at it. So, all right. So check it, right? If they choose, keep picking the wrong thing here, and you go away for a second. So if they choose to not, so now I'm looking at the contour encroachment of this wick, right? Contour encroachment. And then contour encroachment, the quarter, yes. Look at the behavior. Look at what they just did. So if they can't make it back down, then there's a potential for actually, understanding the intent from that point, right? Things you got to be seasoned, right? These guys are saying we're going up. The other one's saying we're going down. And they hit that rejection block like it was going out of style. Look. Now, if you were to take a long from here, aiming further up, probably not a bad plan. But after they've done some stuff, after, and then you have to see how they behave in the space. I mean, come on. This is fascinating. Let me get logged into my job, yeah? So if you see me moving around weirdly, trying to get to my laptop. Okay, sorry about that. You didn't have to get a super duper close up of me, but you did, so enjoy. Okay. That's why you gotta wait, right? You can't just assume they'll um they'll do what you want. Like this is where I'm really tracking for. And they came back into this for there's this order block right here. Sorry, let me pull it all the way over. Oops, I don't need that. Let's see how they behave. Let's go back in here. So where are we? We've tapped below this new week opening gap. What? Ah, la 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 la. Okay. But look at the manipulation. Come on, guys. And look at the behavior. Like once they hit that, yeah. Nice. Am I wrong? I don't know. They got to give you some sort of structure though. But this is like really, really hard. Let me restart this laptop here because nothing appears to be working for me. And too many laptops, y'all. One day, man. One day I won't have so many. It'll be nice and quiet and I can just focus on trading. Let's restart this. Okay, look at the behavior. Consequent encroachment. They filled in this fair value gap, and then they paused at the midpoint between, and they've tipped right back in to the new week opening gap. Wow. Now, if this, basically acts as resistance, then here we're gonna continue on down and finish claiming the rest of this wick. All right, let's see what ICT is saying. Yes. 38. Measure CE if the long wick down into the 38.86 sell side. Dude, I'm learning. They hit CE of that like a boss. Oh man, because they took out the sell side like that. Wow, that was something. They're gonna continue on. This is all manipulation. You know, I gotta take a screenshot of this. Hold on. Let me delete this one for the moment. And let me take a thing. Because I gotta be like, I mean, seriously. From here, they're going back up. They did this the last time they had the news. Repeatable. Repeatable. Now, repeatable behavior. Rejecting off of the new week opening gap. Let's see what they do. Discount wick CE to new week opening gap high. Yeah, it's true. Discount, they tapped it. You could have taken hold on, what kind of, could you get five handles of that? So it's just like approximately there to the high right there. That's 68 ticks, bro. With your stop loss right below there. Oh man, that's a beautiful strategy. What? Oh man, that's amazing. That's amazing. Uh, I mean, I don't know about you, but I'm personally amazed because I saw him talk about this during the last news item. He's like, look at what they do. They wick down. If they come back up to the CE and shoot back up, that's it. They're going back up. And now they're just hanging out inside of the new week opening gap, right? So I mean, from the last one, they drove price back up after that. We'll see if they do that. They need to break this out, turn this into support, and take out this high right here. It is all kinds of incredible, y'all. And I'm so excited I can't even end this stream just yet. Oh man, this is so very exciting. It's beautiful. It's beautiful. What did I say that was? 52. I mean, that's a trade right there. 68 ticks. That's that's beautiful. Tape reading is definitely something else. Ay ay ay. Wait, wait, wait. Well, we've definitely had our fun this morning, that's for sure. I'm gonna call it a day, 'cause I gotta be a responsible adult and get to work. Hey, everybody who's trying to start trading and learning and doing all that stuff, you gotta have something that pays the bills, right? So I'm gonna go make sure that I continue to have my super awesome job that pays the bills. So be safe out here. Happy hunting. Well, drop a like, subscribe, comment. Please comment your thoughts on this morning's price action. It's awesome, right? And that's about it. Shakira out.